It's a brand new week, and it's good to be back after about a week away in Kigali, Rwanda. I'm glad to be here. Welcome to Business Morning, 55 minutes of current and relevant business conversations. That's our culture here, and that's what we're doing today. I'm Ini John Mekwa, and we start off from how the market fared, the equities market. Last week, it was a positive one, 0.73%. In the green is how the market closed at the end of the week, taking the all-share index to 198,407.30. The market cap at 127.36 trillion naira at the close of trade last week. And we see the activity chart was mostly red. However, 3.321 billion for the volume, and for value 164.845 for deals, a total of over 300, almost 319,000 deals at the close of trade last week. We see banking had a lot of profit taken as we count down to the recap. That's on the 31st. The deadline, but we've seen, according to the CBN, last count we had 30 banks have crossed over, so it's a good one, but the investors did take profit last week. Consumer goods was, however, green, as well as industrial goods, and you notice industrial goods, they're looking really green, almost 6% up. For the week. Insurance was down 4.59% down. Oil and gas, not as good as it was the previous week, but managed to close in the positive zone, 1.05% at the close of trade. And when we look at the top trades for last week, we see Access Holdings again, Fortis Global Insurance, and First Holdco. They were the top trades for last week. Top gainers, Premier Paints PLC, Conol, and Bua Cement. So you wonder, of course, the major driver of that positive industrial sentiment we saw in industrial goods. We know it's obviously Bua Cement. We see the top losers for the week: SCOA Nigeria, Fortis Global, and Sovereign Trust Insurance. Talks about insurance recap also seems to be gaining ground, but not so much to drive sentiment. We saw NIRA drive some positive sentiment months ago, but that has obviously died down. Anyway, but we see insurance stocks getting attention of investors again. And the Central Bank of Nigeria says its intervention in the nation's economy is yielding results. Speaking at an event organized by an economic think tank, Agora Policy, the Deputy Governor of the bank in charge of economic policy, Mr. Muhammad Abdullahi, explains that while imports are trending downwards, exports are on the increase. He adds that the apex is focusing on the positives in the months ahead. The event was also attended by officials of the World Bank, top government officials, and members of civil society organizations. Banks and telecommunication companies must deepen their collaboration and share intelligence to combat the growing threat of artificial intelligence-driven fraud. This is according to a new report by PricewaterhouseCoopers. The professional services firm notes that the rapid adoption of AI is reshaping the fraud landscape in the telecommunications sector, enabling criminals to automate scams, impersonate victims through deepfake technologies, and scale fraudulent schemes with unprecedented speed. The 16-page report, titled AI's Dual Role in Telecom Fraud, notes that while AI is helping fraudsters launch more sophisticated attacks, the same technology can also serve as a powerful defensive tool for telecom operators and financial institutions. Cash held outside Nigeria's banking system went down by 197.68 billion naira in 1 month to 5.21 trillion naira in January 2026, even as the amount of money circulating in the economy remained broadly flat and bank reserves dropped sharply. This is according to latest reports from the credit statistics by the Central Bank of Nigeria. The figure shows that currency outside banks declined from 5.41 trillion naira in December 2025 to 5.21 trillion in January, representing a month-on-month drop of 197.68 billion. And this comes as total currency in circulation slips marginally by 1.7 billion naira to 5.731 trillion naira in January from 5.72 trillion naira in the preceding month. Despite the monthly decline in cash held outside the banking system, the data indicates that a very large share of Nigeria's physical cash remains outside deposit money banks, and the proportion of currency in circulation that was held outside the banks stood at 90.91% in January 2026. This means that more than 9/10 of cash in circulation is still outside the vaults of banks during the month under the review, although the ratio is lower than the 94.33% that was recorded in December 2025. Meanwhile, financial markets and policy makers await the release of the official inflation report for February. That's due later on today in Nigeria. Financial derivatives company, that's the FDC, they project that the figure will be lower at 14.07%. The forecast, which is a 1.03 percentage points decrease from 15.01% headline inflation recorded in January, would mark the 11th consecutive month decline, which began in April last year. According to the FDC, the anticipated moderation is driven by relatively stable exchange rate, which has led to reduction in the price of imported commodities. At the same time, FDC attributes the projected drop in the CPI to increased food supply and continued consumer resistance to higher prices despite reduced disposable income. FDC also forecasts all inflation sub-indices to mirror the headline inflation decline. The Republic of Togo has expressed interest in increasing its electricity purchases from Nigeria's Niger Delta Power Holding Company, and this is to meet rising demand and extend reliable electricity supply to newly connected customers nationwide. The request was made during a strategic meeting between the management of the Niger Delta Power Holding Company and a delegation from the Campaign Énergie Électrique du Togo, the national electricity utility of the Republic of Congo. According to a statement by NDPHC, the delegation was led by the Director General of the organization, Debo Umbaro Barakando, who visited the company's management team to strengthen existing cooperation and explore opportunities for expanding cross-border electricity trade. It's disclosed that the company from Togo, headquartered in Lomé, currently purchases about 75 megawatt hours of electricity from the Niger Delta Power Holding Company on a bilateral basis. The arrangement is to help the West African country maintain stable electricity delivery and support economic activities. As the ongoing conflict in the Middle East takes a heavy toll on several economies, including Nigeria, the Center for the Promotion of Private Enterprises, CPPE, has outlined some key strategic measures that both businesses, and particularly small and medium businesses, as well as government, should adopt to mitigate the impact of the current crisis. In a statement issued by its Chief Executive Officer, Dr. Muda Yusuf, the Economic and Policy think tank recommends that businesses should gradually explore alternative energy solutions, such as solar power systems and hybrid energy systems, which combine solar and gas-powered generators in locations where gas infrastructure is available. In addition, the CPPE calls for increased adoption of digital platforms and remote transactions that can also reduce the need for physical movement, thereby lowering energy expenditure within supply chains. The firm explains that strategies such as consolidating deliveries, optimizing transport routes, and improving fleet management systems, as well as leveraging shared logistics platforms, can significantly reduce transportation costs. And talking about the prices, the conflict that's going on globally now in some parts of the world, oil prices rose today. Investors are focusing on return threats facing Middle East oil facilities, despite U.S. President Donald Trump's call for nations to help safeguard the Strait of Hormuz, a vital artery for global energy shipments. For this morning, we've seen Brent go up more than 2%, and it's above $100, $105.55 a barrel. For WTI, it's just on $100. This is a commodity that would normally be about $50 or so. So it's up almost 1.5%, settling up more than $2 on Friday. We've seen all of that. And these are not just numbers. Now, if you're paying more at the pump to buy petrol or diesel, this concerns you. And so that's why I want to drive it home this morning to find out, those who are in the middle of moving the prices, from the global space to us here in Nigeria. One of them joins us this morning to help us make that connection. It's Mr. Jeremiah Olatide. He's the CEO of petroleumprice.ng. Mr. Olatide, good morning. Welcome to the program. Not a very good time for us. We are paying more, and we're seeing the price of petrol and diesel change like maybe sometimes twice in a day. And help us to connect the dots from the global space to Nigeria.
Well, thank you once again for having me, and good morning, Nigerians. It was really a tense weekend for traders in Nigeria, and we were closely looking at the Brent crude to see the movement
all right, Mr. Olatide, it seems
because low Brent crude, particularly unfortunately, that is the largest producer of oil.
Hello, Mr. Olatide, can you hear me? Hello, Mr. Olatide, can you hear me?
Yes, I can hear you loud and clear.
Okay, all right, because we were having some friction.
Yes, I can hear you.
Okay, all right, so please go ahead. I believe we should have a better connection now.
Yeah, so unfortunately, Nigeria happens to be the largest producer of oil in Africa with a 1.5 million barrels production a day. And we happen to be fortunate to have the largest refinery in Africa and the 7th largest refinery in the world. I don't think with all of those values, we shouldn't be in this fix where every oil price shock would have direct effects on our local prices. We are blessed to have oil in our abundance, and we are also blessed to have a functional refinery that can give us over 100 million liters on a daily basis. So those oil price shocks shouldn't be a problem. If there is a form of subsidy between refineries, when I mean subsidy, I mean we have those crude, and one of the major components of refining is crude. And luckily, we have the crude. So I feel the Naira for Crude initiative to be properly implemented. I feel the glitch between the Naira for Crude initiative, Dangote having below 35% of the crude, the 650,000 crude he uses on a daily basis. That is why we are here today. And so many Nigerians on the street are not happy because of those values we have that are not reflecting at the pump. Nigerians still go to the pump and buy above 1,200 naira, and I feel something needs to be done immediately so that all of this glitch would not trickle down to the final consumer, which we know that 80% of Nigerians live in abject poverty, and it is so sad that they go to the pump to pay a 1,200 for PMS and 1,500 for AGO.
All right, Mr. Latide. So there are certain things to consider. You mentioned subsidy. We know that we're just trying to, cut off the link when it comes to subsidy. We talked about the negatives of subsidy, which on petrol, which the country has practiced for years. That's on the one hand. On the other hand, we also have the fact that even when there's crude for naira, is it naira for crude now? It's still the subsistent price of global crude that's also being applied, even here in Nigeria, since Nigeria is a member of OPEC. So where do you see that maybe succor can be given to the average Nigerians without it being abused and without us going back to the subsidy era, which we're just trying to wean ourselves off?
Okay, thank you. Subsidy is an economic tool that is used all over the world. Even US still subsidize some of their essentials. And for a developing country like Nigeria, that they have quite a large number of citizens in abject poverty, subsidies shouldn't be removed totally. Currently, with all the crises, Libya still sell a liter of petrol for 32 naira, courtesy subsidy. And they understand that the economy of the country is so fragile. A large population of their citizens still lives in abject poverty. So they feel that subsidy is needed. So for me, subsidy should be restructured. Now we don't have local refineries springing up. There should be a form of subsidy, possibly in terms of supply of crude to those refineries. And it can also come in form of refined products. We know Dangote has reached its optimal level, and it can produce over 100 million liters daily. So looking at the fact that the oil price is highly volatile, geopolitical crisis could touch prices above a $120, $130 per barrel. Demand and supply could also touch prices above a $120 per barrel. An average Nigerian shouldn't be allowed to pay for those shocks. Looking at the fact that Nigeria as a country is blessed with human resources in person of Alhaji Dangote that has set the pace in the refining business, with the fact that we do pretty well in production of oil. We do 1.5 million barrels, though that is far below our potential. For me, I feel our potential on a daily basis on production should be around 2.53 million liters daily. But because of oil thefts and other form of corruption, that is why we still do below our daily production. So for me, I feel Nigerians shouldn't feel that pain because it's a developing country and subsidy is an economic tool used all over the world to cushion effect like this. And if prices on the international level surge beyond what it is at the moment, definitely prices at the pump will surge near 2,000 per liter. And that is so detrimental for an economy like Nigeria.
Yeah. So, there was also the argument of dealing with monopoly, not allowing just Dangote to be the supplier in the market. So we have some marketers importing. With all of this that's happening, do we still have people importing refined petrol?
Okay, thank you. That's a very good question. The current administration has encouraged local refining by refusing to give import license on petrol. And that is commendable. But on the other hand, we must strike a balance and allow competition to thrive. Because in an economy like Nigeria that is quite still delicate, supply of petroleum products could cause energy crisis, and allowing a major refiner as Dangote to solely supply petroleum products is a good one. But on the other hand, we must also plan for times like maintenance. A refinery is meant to go on routine maintenance, and anytime maintenance of such happens, there might be supply glitch. So for me, I feel importation is key, but the percentage matters. In the US, 12% of what they consume is being imported. In Russia, 11% of the petroleum product they consume is being imported because they understand that the combination of importation and local refinery is key. It helps create enough supply and also helps stabilize prices. Look at what we are facing today. Dangote prices determines the overall prices in the market. As soon as Dangote increases prices, every other variables, every other traders, importers follow suit. So it shows that it's a form of we having a major player determining the market. And looking at the fact that Nigeria is a highly consuming country, we have over 200 million Nigerians with over 70 million consumption of petroleum products. So for me, report came out last week that 6 importers were given import license to bring in petrol. And with that, it's going to create a level playing ground in the downstream sector, and it will create a form of stability where spot prices would be well managed, and Nigeria would definitely go to the pump and get petroleum products at a reasonable price.
All right, sir. Reasonable, obviously, we have different definitions at different times. At a time like this, reasonable might be about 1,400, unfortunately, for Nigeria. But thank you so much, Mr. Jeremiah Olatide, Chief Executive Officer of petroleumprice.ng.
Thank you so much for having me. It's my pleasure to always be here.
Let's take a break now. When we come back, I'll tell you where I was last week. I have the gist all packaged for you. Please stay with us. Back to watching Business Morning here on Channels Television. So last week I was away in Kigali, most of last week, because I was here on Monday. But the Inclusive FinTech Forum started on Tuesday and lasted, there you have it, from the 10th to the 12th. And everybody connected in one way or the other to FinTech and financial inclusion. They were there to rub minds on Africa. You know, I love Africa after Nigeria. So even though the world was represented there, I'm more concerned about the African perspective. Hosted by Rwanda, of course, you can expect that the conversation was tilted towards Africa and when it comes to financial inclusion and the innovations around in the financial ecosystem in the world spilling into Nigeria, where Nigeria is, Africa is, and what Africa is doing. So I put the 3 days together into this report just so that you won't miss any part of it. And here it is for you. The music of the people of Rwanda welcoming over 3,200 registered participants, over 270 speakers from about 84 countries of the world to the 2026 Inclusive FinTech Forum, which is holding in Kigali. Now for this year, our topics slated for conversation include FinTech without borders, trade, trust, and transformation in a borderless digital economy, and building Africa's human capital for digital economy. These are the conversations that will be taking place in different sessions. But at the heart of it all is the government, central banks, FinTechs, investors coming together to chart a course that will accelerate financial inclusion in the world.
One of the first sessions is FinTech Without Borders. Participants believe that fiat may have been building borders in the global financial system. However, new instruments come with solutions.
The tension points, regional integration challenges.
Whatever the solution is, whether it's stablecoin or central bank digital currency, Africans are constantly asking the question, what problem should the continent be solving?
The problem that we are solving for is payments. And in Ghana, I'm happy to share that December 2025, we actually passed the Virtual Asset Service Providers Bill into an act, which has been further assented by the President of Ghana.
I'm solving for the last mile. I'm solving for this amount of people that don't have access because they are facing certain other challenges. I'm allowing them to transact offline where needed, and I'm allowing instant settlement, and I'm allowing to benefit the cost efficiencies that come with the technology that central bank digital currencies and stablecoins bring.
While balancing the needs with innovations, trust stays as a wheel.
Trust is the foundational layer of all of this. So as more and more digital currencies and stablecoins pop up that are Rwandan franc backed, that are CD backed, trust will remain at the core of that.
As of early 2026, Nigeria is the only African country to have launched its CBDC, the e-Naira. Other countries like South Africa, Ghana, Rwanda, Kenya, and Ethiopia are either in the pilot stage or testing. However, the fear of slow adoption seems common across board. On the second day, which was the official opening, it had its focus on leadership for Africa's digital, financial, and economic transformation, captured in the address by the Prime Minister.
Because Africa has historically existed at the periphery of global finance, often facing inflated risk premiums and limited access to capital, we also have much to gain from rethinking how financial systems are designed and how capital flows in this new era. We stand at the frontier of many economic opportunities. Global supply chains are shifting, opening the door for new manufacturing and industrial partnerships. At the same time, rapidly expanding digital technologies are allowing African entrepreneurs to leapfrog legacy infrastructure, an opportunity many are already seizing, particularly in the fintech sector, now the leading segment of Africa's startup ecosystem. The opportunity for Africa to become a cradle of global business and innovation is real.
Both the Kigali International Financial Center and the Rwanda National Bank have their eyes on shaping the future through innovation, impact, and connection.
This year's forum focuses on 4 key priorities shaping the future of finance. And that is building Africa's digital currency corridor, advancing AI-powered financial inclusion, strengthening open finance ecosystems, and mobilizing innovation through climate fintech solutions. Together, these priorities reflect a simple but a powerful idea. Financial innovation must translate into real economic opportunity for people, for businesses, and for nations.
Together, we can shape an African financial system that is inclusive by design, innovative in execution, and global in ambition. A financial system where every African woman and man has the tools to participate in the digital economy, where every promising idea has a pathway to scale, and where finance becomes a true engine of shared prosperity. And the National Bank of Rwanda will continue to support this vision.
Another line of dialogue follows Capital at the Frontier, financing Africa's digital and economic transformation, and it's shared in a special remarks by the Executive Vice President of Afreximbank.
Through the AFC-FTA, we're now connected 1.3 billion people into a $3.4 trillion market, and by 2050, 1 in 4 people on Earth will be African. This is only a blessing should our population get the right education and are entrenched in the digital future. Otherwise, this could be a curse. Under sustainable integration, our economy should expand tenfold. And to unlock this, digital transformation must be our backbone. Consider the impact of this emerging technology. The artificial intelligence alone can slash document processing by 80%, reduce errors by 90%. IR-driven logistics can cut trade costs by 15%. And the ecosystem that we see, the digital ecosystems, can bring 80% of our population into formal financial system. But let us be clear, digital transformation cannot thrive in thin air. It requires hard foundation, broadband, data centers, reliable energy. It requires soft foundation, harmonized policies, and the implementation of the AFC-FTA trade protocol, the digital trade protocol. And without these, our innovation will remain trapped within borders.
In light of geopolitics, fragmentation, and currency volatility, investors' expectations of IFCs is naturally evolving.
Achieving financial inclusivity is also part of the roles expected by international financial centers.
And all other financially innovative products that are coming in. But who has the agility to ensure that these things can actually succeed and succeed very well? These are financial centers. That's what the NIFC actually part of. So we're right in the ecosystem of ensuring that not only Kenya, but also the continent is also at the forefront of now championing all these initiatives, which make us as a continent competitive.
Price doesn't become quite the same issue as it was in the past. It's very much about trying to make sure that my investments, my structure, my family wealth is located in a jurisdiction that I have confidence.
There are two critical things that investors are worried about. One of them is the technology change that is happening and the possibility of the disruption that can result from that, right? How are the organizations and the companies reacting to the global changes in technology platforms and in technology stacks?
And it's become more obvious that everyone has a role to play in turning these good ideas to scalable solutions. Countries on the African continent seem to be catching up.
I'm happy that we're trying to see how we can partner all, between the ecosystem, the financial ecosystem in Africa, partnering together to see that we have a one central system. So it's easy for someone in Lome, Togo to send money to someone in Johannesburg, and someone in Namibia is able to send money to someone in Rwanda. And that's the kind of Africa we want, a borderless Africa where transactions will be seamless. So the conversations have been interesting. I'm so excited because Africa, we are deciding our future, the future of fintech.
After 3 days of intense talks on financial inclusion, with the consciousness of geopolitics, which is largely redirecting trade routes and partnerships, trade tariffs has been leading to protectionism globally. Actioning points and strategies raised here becomes even more imperative, especially for Africa's economic progress and development. Ini John Mekwari.
Yeah, that was the report I put together after spending about 3-4 days in Kigali, Rwanda. Let's follow up on some of the high points from that inclusive fintech forum with the participants whom I met there, but obviously now everyone has gone back to their places of abode. We have Dr. Konstantinos Sanis joining us. Dr. Sanis, good morning. It was good to see you in Kigali and good to see you virtually here. You are in Kenya, I'm in Nigeria. Thank God for technology.
Exactly. Thank God for technology. By far, it is, as quoted also in the conference, it is enabling to reach new heights. So look, what happened in Kigali was a phenomenal event. It was very, very informative. It was actually a great opportunity to understand the fintech developments. And as quoted already, you know, a few years before, you would need to carry a lot of cash to make a transaction, even in the same country and even more cross-border. However, right now, through the power of digital, this is much more easier and enabled. And as very correctly told, Nigeria, where I have also spent myself 3 years living full time and 10 years traveling in major projects, is one of the pioneers on this fintech financial technology transformation.
Mm. So for you, what are some of the highlights or high points you'll take home from that? Because, I mean, nowadays we hear a lot of summit, conferences, forum, and everybody's talking about financial inclusion and AI and all. For you, as an individual, for your company, what are the benefits of attending that forum?
Look, there were many benefits and many learnings. First of all, the importance of regulation. Both Rwanda and Nigeria and other countries, they have been very, very proactive in launching the correct regulation. Even myself, when I was in Nigeria, working for Wema Bank and Alat, it was the first country in Africa that actually established neo-banking and digital banking regulation back in 2018. Similarly, it was the first country to establish CBDC regulation, and as of last week, CBN established clear guidelines on AML and everything. So, and the same happens in some other countries which have proactive regulators like Rwanda and Kenya. So lesson number one is the importance of the regulators and them to be educated and proactive. Lesson number two is openness of the banks and the ecosystem to work with technology companies and startups. Again, Nigeria is one of the most open countries in that. Of course, there is some hierarchy, there is some decision making, but there are a lot of global examples that, and I can even tell you, I don't want to use specific names, but there are many fintechs with large organizations. So number two lesson is openness from the corporations to work with the fintechs and the partnerships. And then number three, equally important also, is the existence of talent and availability to create and develop digital banking systems. Again, Nigeria is one of the countries that has a lot of talent. Maybe Rwanda, by size, has less talent, which means they will need to attract more talent. But to summarize, these were the three main lessons: the regulatory proactiveness, the openness of companies to partner with fintechs and startups, and the existence of talent.
So for Africa as a continent, you've operated in Nigeria, you're in Kenya, had a bit of experience in different parts. When we look at the continent as a whole, one of the conversations there was the need for integration. Whatever system we're doing, if we really want to be financially inclusive, then there has to be integration, you know, on the continent. From your perspective and your dealings with individuals and corporates, have we been able to at least lower those distrusts which seem to hamper integration of financial systems on the continent?
I will be direct, and I would say to a very small extent. And why I say that? For historical reasons, there is a lot of regulatory and legal fragmentation. number one. On top of that, the ecosystem, the banking ecosystem, has been maturing digitally the last years. Up to 10, 15 years ago, the financial inclusion was in small numbers. And because and a lot of banks were mainly giving corporate loans and things like that, not focusing on the retail clients. So all of that, the regulatory and legal fragmentation, as well as the the different areas of revenue and profit for the banks, had resulted on the banks able to survive without the need to integrate. However, right now there are multiple efforts to integrate in policy level through the Africa Continental Free Trade Agreement, but also in technology level through the PAPS system, for example, where they are trying to give to enable Pan-African payment systems. Nevertheless, African inter-country trade remains expensive and slow. So this is what I am saying, that there are efforts happening. The efforts take time. To build the technology and to test it and to optimize it takes time. And then, of course, you have to onboard the partners. So I do know there's a lot of work happening. I do know that there are companies and banks trying to integrate on the Pan-African payment system. Nigeria, again, was the first on building the national switch through InterSwitch. You see other countries building switches the last years, which is another national integration project. So, to summarize, there is right now, no, it's not optimal. However, there is a lot of work being done. I do expect in 3 to 5 years to see clear results, meaning cheaper trade and more quick. And within 7 to 10 years, after the piloting and initial implementation phase, I do expect that indeed, things will be quicker and faster than most even common European markets and Western markets or Asian markets, for the single reason that Asia and Europe have legacy, and legacy makes things difficult. While the good thing with the African trade and the country is that whilst there is no legacy, making it more difficult right now, when it's ready, it will help leapfrog. And it will be even better, and the rest of the world will have to learn from that.
I will certainly look forward to those days. Thank you so much, Dr. Constantinos Sanis, for your time. He's the head of growth, Middle East and Africa at NATEC. Thank you.
Thank you. Have a good day and week ahead. Bye.
And you too. All right, still on the forum, just concluded. I had a sit down with one of the organizers. That's the Kigali Finance Center, International Finance Center. Their marketing manager had a chat. I had a chat with her. That's Ms. Shaduri Rumongi. She's the Chief Marketing Officer of Kigali International Financial Center, to tell us what progress and how they are measuring the progress. This is the 3rd edition of the forum, and of course they hope to continue with this forum. What can we expect, and what have they seen so far in this interview?
The Kigali International Financial Center is a convener. We have partnered with 2 other key stakeholders. That is the National Bank of Rwanda and our Singaporean partner, GFTN, to really convene a global gathering. We are looking at over 3,000 delegates and participants that came to Rwanda to really talk about how we can advance financial inclusion for Africa. And so our role really is to position Rwanda as a hub for financial services, not only financial services, but also fintech. And therefore, this platform, the IFF, gives us that sort of convening power where we are able to bring together regulators, policymakers, founders, investors, and the wider global tech community to really address some of these really pressing issues around financial technology.
So what strategy are you using at KIFC? What strategy do you want to use to achieve this inclusion we're talking about?
Well, the first strategy I would talk about is really partnership and collaboration. We know that the vision is big and the stakes are high. And so as KIFC, we cannot do this on our own. We therefore have to identify the right partners here on the continent as well as beyond the continent. And that's why I talked about the National Bank of Rwanda. I talked about the Global Financial and Technology Network based in Singapore. They have strengths, they have experience, they have networks. And so when we collaborate and partner, we're able to reach our vision much faster. We're able to reach a much wider community as well.
So what about, on the continent, what collaboration do you have with other countries like Nigeria and all?
Mm-hmm. Yes, with Nigeria, we actually have collaborated with the Africa FinTech Network. We've got an MOU as KIFC, and this MOU really allows us to tap into several fintechs on the continent. And interestingly, most of those fintechs are Nigerian. We also attend the Nigeria FinTech Week on a regular basis. And again, we get to network, we get to connect, we get to collaborate with those fintechs based in Nigeria and also on the wider continent as well.
And how do you measure progress, in this journey? What would you say are your KPIs, your key performance index?
Well, the first KPI, I would say, is to, first of all, successfully convene 3,000 plus delegates to come here in Rwanda, to be able to gather them together around the table, all the different voices that matter when it comes to the topic of fintech. That's the first thing. Secondly, it's around visibility. Visibility for the vision and the mandate that Rwanda has to position itself as a hub for financial services and for technology. And then it's the collaboration and the partnerships that come out of the dialogue. Over the last 3 days, there have been so many different sessions. People have talked about so many different topics. And I'll give you an example. Yesterday, the Central Bank of Rwanda and the Central Bank of Kenya signed a license passporting declaration. And what this means is that a fintech that's based in Kenya, for example, that is looking to scale, that is looking to come to Rwanda and set up in Rwanda, does not have to go through the entire licensing process that they initially had to go through when they initially set up. And so such frameworks are very, very key for these small fintechs that are really looking to grow on the continent. So we find that these are some of the success stories, I would say, that have come out of hosting an event such as the Inclusive FinTech Forum.
Yeah, that's very interesting. But I mean, in about 4 years now, since you've had your eyes on this inclusiveness or financial inclusion, what have been like the biggest challenges and what proposed solutions do you have?
Mm-hmm. I would say one of the challenges is around fragmentation. Like I mentioned before, each country, each market has its own regulation. So it's very difficult then to scale as a fintech. And one of the proposed solutions is really to have the regulators, for instance, come together at the IFF, discuss these challenges, bring the founders and the fintechs themselves that are actually facing these challenges, also hear from them, listen to what their pain points are, and then try and think together and say, okay, what can we do? How can we collaborate as countries, as a continent, to really propose a solution? And then out of that came the passporting deal that was signed yesterday. So this is something that I think is really one of the most successful outcomes that we can see, visible outcomes beyond the dialogue, beyond the networking and the connection.
And as you plan for the next forum, what can we expect? What's new? What's going to be big?
Well, we'll keep you guessing. We'll keep you interested. We can't reveal everything right away, but for sure what we can say, it will be definitely another great moment to collaborate as a continent. It will be another great moment to discuss and dialogue on really key themes. And all of this, the whole reason behind hosting such a forum is really about transformation, improving the lives of our citizens on the continent. So that's really the big vision. And so we will keep you posted.
Let's use the last few minutes to see what's going on in the global space. First of all, expectations for this week. We expect the Chinese unemployment rate for February, as expected today, as well as India wholesale index inflation year on year. Also from home here in Nigeria, we're expecting food inflation. All those inflation numbers, the headline inflation, food inflation, urban inflation, that's expected later on today in Nigeria. Tomorrow, Tuesday, Singapore should release its trade balance. Switzerland should reduce its producer price index. On Wednesday, South Korea unemployment rate month on month. Eurozone consumer price index month on month, as well as U.S. producer price index. Of course, there are a whole lot more. We just pick some of the highlights. Also, on Wednesday, U.S. Federal Open Market Committee, FOMC, the press conference will be holding. And Brazil, there will be an interest rate decision on Thursday, interest rate decision in Japan, as well as in Sweden and in the United Kingdom. So Thursday is a very busy day, busy data day for the world. Also on Thursday, we have the UK employment rate as expected, and then the Sweden interest rate and Japan. On Friday, Singapore unemployment rate is expected. In Hong Kong, the CPI, that's the inflation month on month. There's going to be a Euro summit also on Friday. That's expected to determine a lot of sentiment. And Canada new housing price, that is expected also on Friday. And now let's look at the stories that are making the headlines now. We know, of course, it's connected to the conflict going on between the U.S., Israel, and Japan. Flights have resumed in Dubai after the temporary disruptions triggered by the escalating tensions around the Straits of Hormuz. Remember, yesterday, Iran had said that they would allow every other country to go through the Straits of Hormuz except the United States. And President Trump will not keep quiet about that. So airlines briefly were suspended in Dubai. Now, the U.S. president is calling on allied nations to help secure the Straits of Hormuz, warning that the vital shipping route must remain open to protect global energy supplies and international trade. And guess what? There's been reaction to that. Japan and Australia say that they have no plans at all to deploy naval vessels to the Middle East to escort ships through the critical Strait of Hormuz. And Japanese Prime Minister said that her country, despite relying on the region for about 95% of its oil imports, is constrained by its constitution and currently has no plan at all to dispatch naval forces to escort vessels in the Middle East. The Strait of Hormuz sounds far away, but it's affecting us, affecting our petrol price and all. Well, we'll follow the story, of course, at 1:30 to give you updates on that, but it's a positive sentiment at the Nigeria equities market this morning, building on the positive of last week. We're already on 199,682. Perhaps we'll be on 200,000 at 1:30. I hope to bring that news to you at 1:30 during Business Incorporated. I'm John McQuarrie. See you then.